A shoe company just became an AI company overnight, and the stock exploded 582% in a single day. Allbirds, the sustainable sneaker brand that once had a $4 billion valuation, just sold its entire footwear business for $39 million and rebranded as NewBird AI, a GPU-as-a-service cloud provider. You cannot make this stuff up. Let us break down exactly what happened, why the market went crazy, and whether this is genius or insanity. Welcome to the Money Mind. Today we are doing a deep dive into one of the wildest stock moves of 2026. Allbirds, ticker BIRD, surging 582% after announcing it is ditching shoes entirely to become an AI infrastructure company. This is a story about hype, desperation, reinvention, and what happens when a dying brand catches the AI wave. Let us get into it. First, let us understand how we got here. Allbirds was founded in 2015 by Tim Brown, a former professional soccer player from New Zealand, and Joey Zwillinger, a renewable materials expert. Their pitch was simple: comfortable, sustainable shoes made from merino wool and eucalyptus fiber. Silicon Valley loved them. Barack Obama wore them. Time magazine called them the world's most comfortable shoe. In November 2021, Allbirds went public on the Nasdaq at $15 per share. The stock opened at $21 and peaked near $578 on its first day, giving the company a $4.1 billion valuation. It raised nearly $303 million in the IPO. But then reality hit hard. Competition flooded in from Nike, Adidas, and dozens of direct-to-consumer brands. Revenue peaked at $298 million in 2022 and then fell off a cliff, dropping to $210 million in 2023 and eventually $152 million in 2025. That is a nearly 50% decline in 3 years. The stock went from $578 all the way down to $2.15, a 99.6% decline from peak to trough. The company was burning cash, margins were deeply negative at minus 44% EBITDA, and it was staring down a potential delisting from Nasdaq. And then came today's bombshell. Allbirds announced it is selling its entire footwear brand, the name, the IP, the inventory, everything, to American Exchange Group for $39 million. For context, they raised $303 million in their IPO alone. They sold the entire brand for barely 1/10 of what they raised going public. But here's where it gets wild. Instead of shutting down, Allbirds is keeping the public company shell, the Nasdaq listing, the ticker symbol BIRD, and transforming into NewBird AI. They describe themselves as a fully integrated GPU-as-a-service and AI-native cloud solutions provider. They secured a $50 million convertible financing facility from an undisclosed institutional investor. The plan is to use that money to acquire high-performance GPU hardware and lease it out under long-term contracts to companies that need AI compute power. Think of it like going from selling wool sneakers to renting out the picks and shovels of the AI gold rush. It is about as dramatic a business pivot as you can imagine, like if a pizza shop announced it was becoming an aerospace company. So why did the stock rocket 582%? 3 reasons. First, the AI label. In this market, anything with AI in the name gets attention. We have seen this playbook before. Remember when Long Island iced tea became Long Blockchain in 2017 and surged 500%? The market has a short memory. Second, the tiny market cap. At Tuesday's close, Allbirds was worth about $21 million. That is smaller than some houses in Manhattan. When a microcap stock gets volume and momentum, the moves are amplified. The stock hit as high as $23 intraday before settling around $13, giving it a market cap near $148 million. Third, the $50 million in new financing. For a $21 million company, a $50 million funding round is massive. It signals that someone with real money believes in this pivot, or at least believes they can make money on the trade. Now let us be real about the bull and bear cases here. The bull case: GPU demand is exploding. Hyperscalers are capacity constrained. There is genuine demand for independent GPU leasing companies, and companies like CoreWeave have proven the model works at scale. If NewBird AI can actually acquire GPUs and sign long-term enterprise leases, there is a real business here. The $50 million in funding gives them a starting runway, and the Nasdaq listing gives them access to public capital markets for future raises. The bear case, and it is a long one. This company has zero AI experience, zero GPU infrastructure experience, zero enterprise cloud customers. The management team built a shoe company, not a data center. The institutional investor is unnamed, which raises red flags. The $50 million is convertible debt, meaning dilution for existing shareholders. And let us be honest, a 582% move on a name change and a press release with no revenue, no customers, and no hardware is peak speculation. This has all the hallmarks of a pump that could deflate as fast as it inflated. Remember, long blockchain went from 500% gains to SEC investigations. Here's my verdict. Is this a legitimate business pivot or a desperation play dressed up in AI clothing? Probably a bit of both. The GPU as a service market is real and growing fast. But NewBird AI, is starting from absolute zero with $50 million, which buys you maybe a few hundred high-end GPUs. CoreWeave raised billions. The stock move today was driven by hype, not fundamentals. There are no earnings, no revenue, no customers, and no infrastructure to analyze. If you bought in early today, congratulations on the trade. But if you are thinking about jumping in now at $13 and a $148 million market cap for a company that has not generated a single dollar of AI revenue, that is pure speculation, not investing. This is a story worth watching, not a stock worth chasing. And as always, this is not financial advice. Always do your own research. If you found this helpful, hit subscribe and check out our other videos. I am the Money Mind. Let us keep building.